Good morning, good afternoon, good evening to wherever you are in the world. Welcome back to another episode of the Coffee Hour. Today we have a lot of stuff to cover. All right, today was actually a pretty good day, all things considered. We do have some news that we are going to cover. All right, we're going to be talking a little bit about this new Tuttle Strive partnership and an ETF that they are launching in the very near future. I think that one is actually going to be very exciting, especially for those who have been considering maybe a SATA or stretch in their portfolio, because basically this ETF is going to give you exposure to both, right? So that's really interesting. And, as more DATs come online and, bring their own preferreds, et cetera, that ETF will probably start including those as well. We'll also be talking about, a market clip from Tom Lee. So we'll be going over that. We'll be talking about HP earnings and something that just dropped not too long ago, actually before came midday or something like that. Anyways, it was regarding Google. Okay, some news about Google, and we'll hear a clip from Sam Altman about data centers. Okay, so we do have some things to cover. Should be a very exciting stream. Let's talk about who we got here in the chat. We got Chi-Hang saying, "Hey, what's up, Huge? Hey, what's up? Good morning, I believe is the time in Malaysia. So good morning." And we have Dividend Degenerate. I like this Tuttle fund coming. Absolutely, I think this one is honestly a really cool partnership that Tuttle is putting together with Strive or vice versa. Tuttle seems to just be coming out with some bangers lately. I mean, they just dropped Photo. All right, FOTO, the Photonics ETF. Full disclosure, I did open a position in that ETF. And again, they're just coming out with some amazing ETFs. So we also have SATA Stratch Wombo Combo. Yes, Screeching Possum. That is what it is. It is a Wombo Combo ETF. But I think as, more probably digital credit, stocks or ETFs come online, those will be added to this ETF. So it will be a growing list as time goes on. We have Sinusat Capital in the chat. Good evening and good morning to all. And we have Wolf in the chat. Good evening and good morning. All right, ladies and gentlemen, let's get this going. Hold on one second. Got to get this on X because X be Xing sometimes. And I don't think it always broadcasts my post. I think that's this going of StreamYard. But hey, put in the chat because we do have kind of a very varied audience, a worldwide audience, which is pretty cool to be honest. Put in the chat, where are you watching this from? Where are you watching this from? I'll tell you right now, I am currently at this moment in Thailand. So put in the chat if you want where you are located. All right, let me post this bad mamma jamma. And we are off to the races. All right, let's get into it. Let's see what we got. We have from Dividend Degenerate saying, I bought Photo, thinking about their HAL-X fund. The HAL-X fund is actually really interesting as well, but I'm looking for more growth, more kind of exposure to the AI trade. I think Photo, FOTO, is an excellent pairing with DRAM because both are technically bottlenecks. So instead of just buying SMH, which would be the kind of the top layer of this, of this cake, if you will, I think the DRAM and Photo combo is excellent in my opinion. Of course, we do see that it is kind of getting overextended, which is worrying. It is kind of getting overextended. Is there a potential for a pullback soon in the photonic space and in the DRAM space? Probably. We'll see. Anyways, we have Bond saying hello, and let's see what we have. All right, we're gonna skip that comment. Citizen of the Year, ladies and gentlemen. We have a Dividend Degenerates watching from Tampa, Florida. And we have Sinusat Capital watching from beautiful Charleston, South Carolina. Amazing. All right, let's get into it. All right, so always appreciate you guys joining me for the stream. All right. Oh my God. 104 today in Phoenix, says Desert Yinzer. Well, your namesake is definitely proving the point with your comment. I remember like when I was working in the Middle East, the temperatures would be like 120. I think I was in Kuwait and the sun is literally trying to kill you. The temperature at that time was like 120, like 223, but it was crazy because like throughout the day, it's like at its peak. And there's 3 months where it's just scorching hot, like scorching hell on earth. And it'd be like 118 degrees and you're like, oh, this is actually pretty good. This isn't that bad, right? But when you're like in 120, like you're like, dude, this is way too hot. Like the car is like burning, you're sweating, just driving. A couple of degrees makes a huge difference. But yeah, like I know exactly that type of weather. It's absolutely atrocious. I had my cell phone shut off on me in my pocket because it got so hot. It's ridiculous. I don't know how people can live in those areas without AC. Unbelievable. We have Gary Bala saying hello from Pennsylvania. Awesome. Hey, Gary Bala, welcome back. I'm watching from Havana, Cuba, says Citizen of the Year. I know that's a lie. Let's see what else. Okay, excellent. All right, guys, let's get into it. First thing we're going to take a look at before we get into the broader macro and market news and stock news. All right, we're just going to take a look at the heat map. This looks atrocious. All right, we have some news that came out right before the stock market opened over the weekend, and it has to do with obviously geopolitics. Okay, there's a lot of tit for tat, back and forth, and then finally Iran said, hey, we're taking the ball and going home. We're going to cease all negotiations. This thing is done, right? And it was because of, some other things happening in another country. And anyways, neither here nor there. Let's talk about it. Nvidia, Broadcom, MU, of course, doing well. Look at the semiconductor space. Just the big three are doing really well. And this is definitely on the backs of Nvidia doing Computex in Taiwan at the moment. So they had their keynote. Jensen Huang had their keynote yesterday. I hope you guys got to catch that because it was an excellent keynote, but we will cover kind of the highlights in this video or in this live stream. All right, software finally catching a bid. Oh my God, software is finally catching a bid. All right, ladies and gentlemen, let's get a round of applause for that. This is one of the most unloved sectors out there, and it is finally starting to pump a little bit. So good, finally. Computer hardware, we got SanDisk, we got Dell. We're going to talk about HP earnings today because HP had an amazing quarter. All right, so we'll be talking about all of that. All right, let's move into the futures and see what we're doing there. Again, not so good. Again, this is probably because of the whole Iran geopolitics stuff. Oil is probably going to climb back up. Still below $100 for now. So we got to wait and see. Gold, silver, again, not doing much of anything. Bunch of lazy metals. All right. So S&P 500 up 26 basis points for the day. We had a nice little pump and then it kind of, fizzled out. For gold, again, not doing too hot, down 1.42%. And then we have Bitcoin absolutely getting wrecked. You guys see this? Saw it over the weekend and I was like, well, is what it is. Let's go. And we are probably definitely trending again down to the 60s range. I think it's probably going to be the high 60s. Think like 66 to probably 68. So probably around that range. Some are calling for sub 50. Some are calling for 35,000 Bitcoin. I don't know what the heck the actual answer will be. All I know is if it does go lower, I will definitely be buying much more. All right. So at least in IBIT shares. All right. Speaking of IBIT shares, I just want to put this out because this is my own personal win. I did finally reach 2 Bitcoin in IBIT shares. All right. So I currently hold 3,652 IBIT shares. IBIT is the BlackRock Bitcoin Trust Fund or trust, whatever you want to call it. And finally reached it. So I'm going to stop my buying for now. And I'm just going to wait. If Bitcoin continues to drop lower, then if it reaches these certain ranges that I have, for my own personal targets, then I'll probably dump a little bit more. But yeah, my buying is pretty much gonna be a little more muted at these levels. So, again, awesome. All right, who else do we have here in the chat? Okay, we have, let's see. We have Kathy. Welcome, Kathy. Thanks for stopping by. She's messaging from Orange County, California. Nice. Very nice. Let's see. We also have 1320 Ikamasho. Why did the space funds drop so badly today? Profit taking. All right. It's profit taking. There's so much hype around space. It had an amazing run up this last month. But, hey, everything that goes up and to the right in sharp fashion usually has a nice little pullback. But this is profit taking. Again, SpaceX hype. That's really it. SpaceX is supposed to debut later this month. I think it's June 11th is what I saw. So keep that in the back of your mind. Again, now there's all this talk about SpaceX and, the lockup period for investors, and the investors in SpaceX now are going to use basically retail as exit liquidity, right? So not looking good. There's a lot of FUD right now. Okay, let's see. So Dividend Degenerate said, profit taking about more spacey. We have Skeptic in the chat. All right. Hello, Skeptic. Welcome. Let's see. No, we did not even cover that yet. We will cover that here in just a moment. He asked, did I miss the Super Bitcoin Degen Digital Credit or Dgcr ETF that is coming out? No. All right, real quick, just want to cover another win. We had Victor, aka Padre, in the chat. He called this out. Again, I'm a day ahead, so that's why the date is 5:30. But he called this out and said Nam is crushing it though. Could fly next week. Nam hitting now. So he posted that in the Discord. All right, if you guys want to link to the Discord, no paywalls. We got nothing to sell you. It's just a bunch of investors that basically are a bunch of degenerates. I'm just kidding, of course. We just have a group of people. All right. So if you want to join, link is down below in the description. That is a shameless plug. But anyways, Vic, again, shout out to anyone that did get in NAM from the Discord community, because this thing had an amazing pump. I sleep at the helm, of course. I missed it. I didn't even want to get into it, but it had a 45% gain over the last 5 days. On the last day, today, basically had a 36, almost a 37% gain, right? Beating out the index. Fantastic. All right. So again, shout out to everyone who was able to get into that stock. All right. So hey, man, we're just piling on the wins. We are just piling on the wins. And you know who arrived? Rodstaman has arrived. All right. We also have Vladdy in the chat. Hello, everyone. Well, hello to you too, Vladdy. All right, cool. Let's move on to our first piece of news, and that is the collaboration or the partnership between Strive and Tuttle. All right, Tuttle Capital Management. All right, this one is going to be really, really interesting. This is the T-Strive Digital Credit ETF, ticker Dgcr. And I'm sure you guys are wondering, what the heck is this? Basically, if you guys understand Stretch and if you understand SATA, what Strive and Tuttle are doing is they're basically going to combine it into a single ETF, but it won't stop there. Okay, so they hope to hold about 10 of the largest digital credits in the future. So whenever those eventually launch, because the market is going to launch more of them, because everyone likes SATA and everyone likes Stretch, right? There's just been this insatiable demand for these two digital credit instruments. Of course, this is not a endorsement of any sort. Okay, you have to understand the risks associated with this. Actually, yesterday we covered this on the stream, the Sunday edition of the Invest and Chill, and we were talking about SATA, we were talking about digital credit, and basically what you're putting into this is trust that this company, MSTR or Strategy or Strive, is going to be able to pay you that distribution or that dividend, okay? Because you're buying a credit instrument. These are preferred share, not real preferred shares, but these are perpetual preferred equity, okay? So this was the press release. Strive and Tuttle file for ETF to invest in Strategy's preferred Stretch stock and Strive's SATA or SATA. Okay, so here's some quick highlights. Major Bitcoin treasury company Strive, ticker ASST, is teaming up with investment advisor and ETF issuer Tuttle Capital Management on a new exchange-traded product, according to the SEC. The T-Strive Digital Credit ETF is looking to invest in preferred equity securities issued by Bitcoin treasury firms, namely Strategy, the largest global Bitcoin holder, and Strive, which recently entered the top 10 largest corporate Bitcoin treasuries by number of Bitcoin. The new T-Strive Digital Credit ETF, if approved, would trade on the CBOE exchange under the ticker Dgcr. According to the prospectus, Dgcr would not directly invest in Bitcoin and would use swaps and leverage to amplify its income exposure to Stretch and SATA. Very interesting product. We have here Tuttle's Matthew Tuttle would serve as the primary portfolio manager, with Strive Vice President Chris Nicholson named as the sub-advisor according to the filing. All right, so again, some really interesting things happening in the digital credit space, especially in the ETF space. So we will be covering a clip at the end of the stream regarding because Tuttle, one of their representatives, actually went on CNBC and was talking about this wave of ETFs. And it's funny, we were just talking about this yesterday about how we as investors, we're completely privileged at this point in time. Because, everything as far as ETFs are concerned, it was all about, broad diversification. Maybe you had a thematic here, maybe one over there. You had sector ETFs, but now we have thematic ones. We have more niche sector ones. We can invest in ones that are playing on a trade like DRAM or even Photo from Tuttle. You have the high yield stuff, and they use all the strategies under the sun. And I mean, this is really an interesting time. And we even have the single stock ETFs, and now we're going to have the digital credit ETFs. Could you imagine just a couple of years ago if someone talked about Bitcoin digital credit stock that's going to pay you an interest rate, and one that's going to pay you every single day? Like, you would not believe it. You would not believe it. Strive is the daily dividend company. All right, they basically took this. They basically took this from Realty Income, ticker O, the monthly dividend paying company. But now this is the daily dividend company. Okay, so give Strive, a lot of credit, because they are the first ones in the history of the stock market, as far as I know, to ever do a daily dividend. Okay, absolutely amazing. We have Vlad also saying that he is watching from Toronto, Canada. Well, welcome. And we have Altafi. Hey, what's up, man? Hello from New York City. New York. Isn't that where dreams are? All right. Anyways, so some of you guys might not be familiar with who Strive is. I'm sure you guys know who Strategy is. You guys know that they buy a bunch of Bitcoin, Michael Saylor, the whole 9 yards. But anyways, talking about Strive. All right. Why is SATA so cool and important and, exciting for retail? Well, it's offering a 13% interest rate. All right. So that's a distribution yield for you guys. And it's going to move on June 16th to daily dividends. All right. So you're going to get 250 payments a year, basically paid every day the market is open. Okay. Strive targets a 99 to 101 trading range for the SATA stock to minimize the volatility of the security. The company currently holds 18 months of cash and marketable securities in reserve for dividend payments, and also holds over 15,000 Bitcoin, which when combined with the reserves gives the company the ability to cover dividend payments for around 20 years. Okay, same thing as a Strategy. I mean, they got $60 billion worth of Bitcoin, and they just sold 32 Bitcoin, and the entire market lost their shit today, which was absolutely hilarious to watch from the sidelines, because people are speculating this is the end of MSTR. Saylor said never sell your Bitcoin. He's selling because he can't raise the money to pay the dividend. Absolutely hilarious. Absolutely just a clown show. Anyways, the dividends paid by SATA are classified as return of capital. So you're getting paid your own money back. Not really, guys. Understand what ROC is. We all know what ROC is. Okay, it's just a tax classification, which means that they're going to defer the taxes on that distribution, okay, until you get to a cost basis of 0. All right, which means they're tax deferred for U.S. investors. So again, a very incredible product. Punter Jeff or Jeff Walton just did an interview on what Bitcoin did, and he talks the game about SATA. He talks everything about SATA, the risks, and it was a really good podcast. Really recommend people check that out. All right, let's move on from that and just check what Strive actually is doing over here. So this is kind of the back end. You guys can see what they have. All right. Where is it? Yeah, 13%. Their annual dividend commitment is $74 million. They have coverage for up to 15 years. Okay. Stretch. This is the other stock that is going into that digital credit ETF from Tuttle. Again, this is what we're talking about here. This will be listed soon. This is the other instrument that's going to be added in there. Strategy. They try to keep this at about $100. But now they're moving to bi-weekly payments. So you're going to see that NAV kind of just, not the NAV, but you're going to see that price, drop every 2 weeks. And then people are obviously starting to get more interested in SATA. So that is stealing some of the thunder from Stretch. But there are some really big funds massive funds like, I think PFF is one of them, and they own a ton of Stretch. I think it's their number 2 holding in that ETF. But anyways, this is Stretch. Again, they're looking to give you low volatility, and they're looking to give you about a 11, it looks like 11 and a half or so interest yield on that product. And again, this is also ROC, return of capital. So when you combine those two, you can kind of figure out what your blended yield will be for this, product. But again, they're going to use leverage and swaps in this ETF. So you should probably see something a little more juiced up. But not only that, when you think about the future and other credit instruments that will be dropping, from either other digital asset treasury companies, then this ETF will start to get filled up with those. This isn't going to be like the BMAX from Rex, where, Saylor basically said, hey, I'm buying back all my credit, and BMAX, Rex shares is like, well, we don't need BMAX anymore. So then they kind of closed that fund down. So anyways, let's see what we got in the chat. Let's have this for a backdrop. I think this is cool. Okay, so we have from Scooter D. I'm losing faith in Bitcoin. Someone build me up. Brother, let me tell you. Do you think the United States government is going to become fiscally responsible this year or in the next 5 years? All right, we are currently over what? $9 trillion in U.S. debt. Let's see, U.S. debt clock. Let's see what it is currently. I think we're at like 9 trillion. Okay, so we're printing money like it's going out of style. We're just continuing to print, and we have no reason to stop. We need to fund the war machine. We need to fund wars. We need to fund all this crazy crap that the government is doing. That's devaluing fiat currency. All right, so there's only 21 million Bitcoin, as you know, and not only that. Hold on one second. Not only that, with Bitcoin, you just got to buy it and wait. Like, there's no earnings reports. There's no CEO doing something stupid. There's no lockup periods. There's nothing. It's just Bitcoin, right? Should you be full ported into Bitcoin? I don't know if that's the right answer. But hey, I'm super bullish on Bitcoin because of the tailwinds. There's just so much tailwind for Bitcoin, and to have an allocation. You have the ETFs that are dropping. MSBT, which just came from Morgan Stanley, that dropped. You have BlackRock buying up a bunch of the Bitcoin because people are buying into IBIT. You have all of these income products for Bitcoin coming out. I mean, what's not to like about Bitcoin right now? I think even if the price is going down, then cool. If you do a little research, my friend Scooter D, on the 4-year cycle, on the power law, then you'll realize that this drop is nothing to be afraid of, because usually after these drops, at least over the next 2 to 5 years, Bitcoin has an amazing run. So look up the power rule or the power law, whatever it is for Bitcoin. Understand that. Understand the Bitcoin 4-year cycle. They're two completely different trains of thoughts, but they all point to Bitcoin going up. Okay. You just have to, survive the volatility. And again, the short-term volatility is the price you pay for long-term gains. So keep that in mind. All right. And wish you the best of luck. This sucks. Bitcoin winter. This is my first cycle with Bitcoin and Bitcoin winter. It absolutely sucks. I just bought Bitcoin and it dropped another 2%, but I'm like, whatever, I'm just going to buy more. That's it. I don't care. I'm just going to buy more. Stay off X, stay off YouTube, when everyone's like, oh, Bitcoin's going to zero, don't read into Peter Schiff's garbage. Just British Hodl is by far my favorite YouTuber when it comes to Bitcoin. He says there's only 3 rules to Bitcoin. And so a lot of you guys might have heard this. All right. There's only 3 rules. You buy Bitcoin, you shut up, and you become fabulously wealthy. That's it. If you just follow those 3 things, you're gold. All right. Anyways, moving on from that. Good luck on that. Again, not financial advice. Do your own research. I don't, I'm not saying go buy Bitcoin. All right. Got to put that out there. So for Citizen of the Year, of course, his BS radar is going off. I would highly recommend you check out Punter Jeff Walton's video with CoffeeZilla, because that one was phenomenal. I think CoffeeZilla got absolutely annihilated. And I'm a big fan of CoffeeZilla, but I think he had a huge misunderstanding of not only Bitcoin, but also what the credit instruments are used for. He was attacking more so the marketing and saying, oh, the marketing, saying it's like a money market account. It's like a bank account, blah, blah, blah. It's like, okay, so what? So what about the wording? Like the credit, the idea behind it and the math is the math. So that's just what I recommend. I'm sure there will be a lot of pessimism or speculation about these products, and maybe not speculation. That's not the right word. Probably pessimism is the better word. But hey, it is where the finance markets are heading. Do you think there will be more stocks for daily dividends? I don't know. Again, a Bitcoin-backed digital credit is the first of its kind, right, to hit the finance industry. It's very new. A lot of people are skeptical of it. They don't trust it. Give it a little bit of time, maybe a year or two of performance, and I think people will start piling more in. More retail owns Stretch than institutional. So what does that tell you, right? And daily dividends, a lot of people are buying SATA because they like the idea of daily dividends. So again, what is the market telling you? What is the market telling the fund managers or these companies? Investors want daily dividends. We have from Gary Bala. Amazing variety and range of ETFs available today as never before. Yes, we are indeed privileged investors. Definitely agree there. Do you think there will be more stocks for daily dividends? We already answered that. Let's go. BMAX never paid a dividend. Yeah, BMAX never paid a dividend. It was a bet on the convertibles that these companies, these mining companies and Strategy were offering. BlackRock is bullish on Bitcoin. I am bullish on Bitcoin. Couldn't have said it better myself, Rasaman. Let's see. Yeah, I mean, Chang, the United States, man, we just print money like it's nothing. It's all Fugazi, right? It's all Fugazi. It's all fake. Gold is still shiny, says Padre. Of course it is. Of course it is. All right. We also have Robinhood seems to be decoupling from Bitcoin finally. About damn time, says G. Well, I say that, but G Mood also said this. Robinhood seems to be decoupling. Definitely agree. Because that Robinhood's just been in the dumps lately, and I'm still bullish on it. It's still doing a lot of good stuff. Let's see what else we got. I think you mean quantum. Again, that's quantum FUD. I think by the time any quantum threat is real, we'll already have that figured out. Let's see. Do you think there'll be more ETFs for daily dividends? Yeah, I mean, eventually, sure. Let's see. And Berkshire finally woke up to the AI infrastructure story. We will be covering that in a bit. All right, let's get on with the stream, ladies and gentlemen, before we get stuck. First news we got to cover because it's geopolitics, and we need to know why the market is selling off. Well, it's because of this. So it's a quick 3-minute clip. Let's listen in.
Trump, what can you tell us?
Kelly, that's right. I called President Trump a short time ago, and he picked up to talk about the negotiations over the weekend with the Iranians. We had this report at the top of the day today that the Iranians were actually breaking off negotiations with the United States. That moved oil markets. And so that's what I asked the president about. I said, do you think the negotiations are over now, or is this a bluff by the Iranians? The president said, I don't care if they're over, honestly. I really don't care. I couldn't care less. If they're over, they're over. If they're not, I think they took too much time. Frankly, I think they started to get a little boring. The president said he thinks that the Iranian side was tapping us along. That is, that they were stalling for time. Ultimately, on oil prices, the president was confident that he said oil will be dropping like a rock. He said, ultimately, if the Iranians want to try and have a nuclear weapon, I will blow them up to kingdom come. He said what this is all about for him is a strongly held conviction that the Iranians should not ever be allowed to have a nuclear weapon, and that American voters will tolerate higher gas prices as long as they know what the goal is here. I also asked him about Netanyahu and the Israelis. I asked, it seems to be that the Iranians are saying they're not going to negotiate until Israel stops attacking in Lebanon. Have you talked to Netanyahu about it? I asked the president. He said, this is about 40 minutes ago, he said, no, but I'm going to ask him what's going on with Lebanon. They've been fighting for a long time. Now, since our call, just in the past couple of minutes, we've seen a report on Reuters that crossed the wires a short time ago, suggesting that the president has now called Netanyahu to discuss that. But at the time that he and I spoke, he suggested that, in fact, they had not talked yet. So then I asked him, what is the end game here in terms of the Strait of Hormuz? How ultimately are we going to get out of the situation that we're in? The president said he thinks that NATO should come in and help the United States out. He said, they're the ones, he said, we don't use the Strait. We don't need it. We have a lot of oil. And I said, have you talked to anybody at NATO about that? Have they changed their tune on coming in to help the United States in the Strait? He said, they would if I wanted to, but we don't need them. We don't need NATO. They were very weak and very sad. And the last thing I would leave you with is this.
Very weak and very sad, says Trump. And look what he's got in the background over there. Freaking the UFC, what is the UFC fight that's coming up, I think. I have not been keeping up with that, but goddamn, that is such an eyesore. Like, who would have ever thunk it? Who would have had this on their bingo card that the White House would be hosting a UFC fight? Absolutely amazing. Anyways, yeah. So anyways, that is the latest update with Iran, US, and what's going on. Look, the oil markets for now seem to be kind of tame, right? But the market obviously kind of sold off on this news, minus some of the semiconductor names. Again, I think that is attributable to at least Nvidia's Computex that's ongoing in Taiwan from June 1st to the 4th. I thought it was the 5th. I read that somewhere, so apologize. I actually wish I knew that the Computex thing was going on and Jensen's keynote was going on after yesterday's stream, because I would have just streamed that whole thing. Because there's a lot of cool things in there. And I don't know, I like watching these keynotes by Jensen Huang because you get a lot of amazing insight of where the industry is heading. So we will cover some of the highlights from that keynote later in the segment. All right, so let's move on from this. So we have Tom Lee talking, and of course, hey, guess what? We're bullish, right? That's what Tom Lee's basically going to say. But, again, the reason why I like to listen to Tom Lee, one, I'm a BMR shareholder, so that's one of the top ones, but also because his macro forecasts have usually been spot on, and it's a good understanding of what is going on in the current market. He still thinks that there will be a sell-off in the future because of the new Fed that we have, Kevin Warsh. All right, but you couple that with earnings, which this last earnings season was really good, at least for a lot of the tech names. And we see that with, companies like Dell and now HP having, 30% gains. It's just a lot of the semiconductor names have done really, really well for themselves as well. So let's listen in on what Tom Lee has to say.
Strat Capital, as well as a CNBC contributor. Tom, welcome. I don't know if you heard me talking. I don't need notes to talk about you because you're on a lot, and I remember what you say, and just to sort of set the stage for what we're going to talk about. In the past, you've made some calls that people should never make. Like, it's going to be a good inflation number on Friday. S&P is going to be up, 8% this week. And a lot of times it was borne out, and you've got a reputation for being fearless that way. The most recent thing that you did, which came through, and it doesn't really show it that great on that chart right there, but for the year you were bullish, and we were going along quite nicely till the war. And I remember it was almost a mini Liberation Day sell-off. Not quite as bad, but pretty steep. And you said, it's already done. And by the end of this month, we're going to be significantly higher. And it was right in the midst of things hitting the fan. Not only did that happen, we took off in April, just like you said, and we've continued in May. So, I mean, you could take a complete victory lap. And we've got so many people that come on here that have no idea what the market's going to do near term or long term. And it just contrasting, what you do so well from time to time. You can't do it forever, though, Tom. You're going to be wrong one of these days, but you're right again this time.
Yeah, well, yeah, thank you, Joe. I know it's been a tough market for folks. I mean, I'm not surprised. We were kind of expecting 2026 to be a year where turbulence could happen and people would see head fakes. But there's still some really powerful tailwinds for America. One is, of course, the AI story. And now we're learning about the energy independence, right? America can deal with high oil because we're not going to have a shortage of it. And then there's further tailwinds coming because as AI moves downstream, it's really benefiting American businesses. I think that's why S&P earnings came in for just the first quarter $10 higher. That's $40 for the year. And if you just put a 20 multiple, that adds 800 points to the S&P. So I think there's a lot of grounding for why stocks are able to recover. So it's, but again, I think we still might have challenges between now and December. So I think everyone still needs to be vigilant, but generally bullish.
What did you say about the next 2 or 2.5 years being some of the best market activity that we've ever seen? You still feel that way? And that was not on this show. You said it somewhere else. But what is your forecast for the next 2 years, and what's it based on?
Well, I think a couple things are coming together, Joe, that are going to really support a few things that may only happen like once in our lifetime. One is I think the U.S. economic growth rate is actually starting to step up. In other words, we could grow at 4%, and for a mature, largest economy in the world to start to accelerate growth, that's pretty astounding. The second is the U.S. is one of the biggest exporters of the most important tool in the next 10, 15 years, which is AI products. And that means we are a net, essentially, exporter of a high-value product. And there's so much capital, I think, misallocated today because so much of it is held in private alternatives, but it's going to move into the public market. So I do think that, plus the demographic tailwind of millennials and Gen Z adding to the workforce, but then also beginning to inherit generational wealth. I think that is going to set up for after 2026, perhaps, over the next 2 years, some of the biggest gains of the stock market in our lifetime.
And ask him about Mark Cuban. I don't know if you saw Mark Cuban said that he's now dumped or sold all of his Bitcoin, given that he no longer believes it's acting as a hedge against inflation or anything else. Argues gold is proven.
All right, where was that comment earlier? Hold on one second. I gotta pause it right here. I gotta help my boy out, man. I gotta help my boy out over here. Where is you? All right, the Scooter D. Okay, here we go, man. All right, pay attention here because this is where Tom Lee hypes. This is where I get hyped up every time Tom Lee talks about Bitcoin. All right, let's go.
To be a better bet, and that Bitcoin has not acted the way it should if it's supposed to be digital gold. What say you?
Well, on the one hand, I think Mark is right. Crypto's been disappointing because crypto should move with, equity markets, and it should be rallying with software. Software has really started to rally big, and crypto hasn't moved. So I think there are what I call, quote, rage quitting, people selling here as if something is wrong. I mean, one, I think that's what always happens at the end of crypto winter. If someone asks me, is the thesis for Bitcoin or Ethereum broken? It's absolutely not, because one, the more work we do, and we're hearing it from founders like Palantir, Bitcoin and Ethereum are really the future of money because mass and compute, or compute and energy, however Elon puts it, really are what's scarce. And you're going to need to control agent systems. And as AI systems evolve, right, we're now talking about using commerce and operating websites. You need decentralized identity and verification. That's really what crypto does. And we know Wall Street wants to go towards tokenization. It's a vast improvement in efficiency of actually how money moves. And it's an innovation. Well, that only happens on Bitcoin and Ethereum and other smart contracts. So the future isn't changed, but the spotlight today is, of course, on semis, memory, starting on software. But as people focus downstream into the future, that's really, I think, when the bid comes for Bitcoin and Ethereum. Because
when you talk about stocks, it was so easy for you. You did it, $10 times 4. That's $40. Put a multiple on it. That's 800 points. Why do you even try with Bitcoin or Ethereum? What's your comparable analysis to be able to come up with anything to make predictions about Bitcoin or Ethereum? There's nothing that you can base it on, Tom, except maybe psychology or sentiment or something. Yeah. Actually, market sentiment plays a huge role because it's sort of essentially risk premia. But there are two proven ways to value crypto. One, of course, is just network usage, because wallets and activity per wallet still explain, even now, 87% of the rise of Bitcoin. So as long as more people use it and they're transacting it, the value of Bitcoin should go up. It's a network effect. And the second is the umbrella value of gold. Gold when it hits 5,000, if Bitcoin had the same network value as gold, and gold is not as scarce as Bitcoin, that would put Bitcoin at around 2 million. So to me, I think there's still two ways to look at the value. And of course, for Ethereum, it's been shown for every dollar of tokenized assets, tokenized dollars or others, it's created $1 value for ETH, the coin. So if you believe Wall Street's going to tokenize, Ethereum's price should go up a lot.
All right, we'll end it right there. So just some key highlights from this clip, because again, these are things that he brings up, and he's kind of never shifted from this message. All right, but he's saying that, just, hey, investors should be aware that this year is going to be very turbulent. It's going to be up and down, volatility. You're going to have swings. You're going to have ebbs and flows, etc. We've all been feeling that since January 1st. Okay, since the first market open. All right, we've seen already cycles. We've seen sector rotations. We've seen hype. We've seen friggin' everything under the sun already happening. And now we got the new Fed coming in, and we have, this conflict, this black swan event. Nobody had on their bingo card that, the United States would be engaged in a war with Iran, and oil would spike up and global shipping would be impacted. Countries are basically burning through their reserves. Nobody had that on their bingo card. But, he said that, hey, this is going to be a volatile year. Expect about Q4 is when, hopefully things should start to normalize. But he still remains very bullish because of AI, energy, and energy independence. We've seen from the earnings reports that things have been extremely good. And, economic numbers have been coming in pretty well. Again, the ISM is still above 50. So that shows that the United States is an expansionary territory. Let's see what else he also mentioned. So United States is a major exporter of two things that's really big right now. That's AI and oil. So United States is doing pretty damn well at the moment, even though, again, we see from a human perspective, gas is still expensive at the pumps. We still see job layoffs, and that's scaring a lot of people. We're seeing, I don't know how many of you guys have been going through graduation or seeing graduation clips, and usually have these like keynote speakers talking about how much they hate AI, and they say they're robbing futures and it's making people stupider, and stupider, I don't know if that's really the word, but making people stupid or even more mediocre. So you have that, but you also have other people, other keynote speakers at other colleges that are saying, hey, this is a new tool that people need to get familiar with, and they need to use it if they want to remain competitive in the space, or in their job space, or in their industry. He also talked about the private alternative. So you have companies like SpaceX, Anthropic, OpenAI, which are all IPOing this year. You have a lot of money tied up in these names. And eventually, when these companies do IPO, those LPs, once the lockup period is gone, they're going to dump. They're going to probably get their money out. Not because they lost faith in these companies, but because they need to rotate that money, right? They've already ran it up so much. Their returns are probably amazing. So they need to get out, go buy their Miami beach house, go buy a Lamborghini, reinvest the rest of the money back into the markets, right? So it's going to be a rotation of private money back into public money. So I think that's an interesting thought. He also mentioned, yes, and the Bitcoin and Ethereum. Again, the story for these two assets have not changed. Tokenization for Ethereum, it has not changed. We went over some charts on another stream. I think it was Thursday stream. We went over some charts. Real world asset tokenization is going up instrumentally every single year. And this year has seen the greatest growth for RWA. And it's all being done on the Ethereum blockchain. We have major companies, major institutions, major banks moving onto the Ethereum blockchain. We covered 2 money market funds that have moved onto the Ethereum blockchain. I mean, there's a lot of bullish sentiment, not only for Ethereum, but also for Bitcoin. Again, Bitcoin, digital gold. You don't have to bet very much, as far as the United States becoming fiscally responsible tomorrow, the dollar devaluing, continuing to erode purchasing power. Meanwhile, 1 Bitcoin is 1 Bitcoin, just like 1 ounce gold is 1 ounce gold, right? Everything else is just getting worse. Meanwhile, 1 Bitcoin is always 1 Bitcoin. 1 ounce of gold is always 1 ounce of gold. So at least that's kind of the idea. He also talked about AI agent verification, right? I think that's an interesting point because we have not heard too much about this yet. But you have companies like Reddit who want to implement kind of proof of human, right? So Tom Lee has a stake in Orbs, which is led by Dan Ives, and it's basically a DAT for a crypto called Orbs, which is backed by Sam Altman. And basically the whole story behind this is that they're focusing on the proof of human because that's in the age of AI, you don't know what's real anymore, right? There was some talk about putting watermarks on AI generated videos so people can discern the difference and understand that this is an AI generated video, or at least this person, this girl that, you know, people are talking to is not real, right? We see a lot of that happening as well. People are, you know, there's AI agencies creating OnlyFans of AI agents, and they're making money off of this stuff. It's absolutely disgustingly horrendous what is happening. And this is the reason why DRAM costs so damn much. But anyways, those were kind of his thoughts. Again, the proof of human stake, again, he mentioned it, and I think it's something worth at least keeping in the back of people's minds. I'm certainly keeping it in the back of my mind because we're seeing that happen right now. You have people that can't even discern real footage from AI generated footage, or a real human from a fake human, right? And then you also have the bots that are all over Reddit, all over YouTube, all over social medias, Instagrams, TikToks, whatever. They're all over the place. And it's only going to get worse, right? Especially with the advent of agentic AI. Okay, so anyways, long tangent. Wanted to cover that. Those are just some of the key points from this video. All right, let me check the comment section. Actually, we'll pull this back up. Let's see. Stupid is as stupid does, quote from Bitcoin haters. Well, hey, eventually someone will be right? Eventually somebody. Gary Bala says, I'm taking an AI course and using Google's Gemini for multiple tasks. Amazing tool. I would say so as well. I haven't gotten into the task creation portion yet. I do have some tasks that I run that help me, but they're not the greatest. But I am using them, and I think things are going well. Let's see. Anthropic today filed for IPO. I did not see that news, so I'll take your word for it. Let's see. Did you quit your W-2 job when? So I left the workforce August of 2024 is when I left. And I've pretty much been, you know, a statistic on the job unemployment numbers for the United States. So I've been a statistic ever since. I'm happily unemployed. I've spent 8 years working in the Middle East for the DoD, for the Department of Defense as a contractor, 12-hour days, sometimes 6 to 7 days a week. It's just, yeah, it burns you out after a while. So anyways, I am very happily unemployed at this current moment. Let's see. All right, so moving on from that, let's head off over to a clip about data centers. Okay, this is coming directly from Sam Altman, and this is probably why maybe the space hype could be dying down. Okay, something to consider, something to keep in your minds. Data centers in space, I mean, it's still very speculative. It is still very way out there. But Sam Altman kind of gave his thoughts. And again, this is the CEO of OpenAI, who's been buying up freaking compute space like it's, you know, like hotcakes. There's just not enough compute, right? There's not enough data centers out there. So, you know, between Nvidia, OpenAI, the hyperscalers, everyone just shuffling money all over the place, billions and hundreds of billions, probably reaching up to $1 trillion in 2027. This is his thoughts on the whole data center stuff.
You know, the last week I was hearing about compute, for example, companies starting to wonder, well, what are we spending it on? Our bills are going through the roof, and it's not clear to us exactly what you know, in other words, I know a lot of my spend is going well, but I don't know which part of it.
So I think this is the most fair criticism right now of AI, which is you hear companies saying, I am spending a ton of money on AI. And I know some great stuff is happening, but I know there's a ton of waste. And you know, how long do I have to wait for it to really show up in revenue, and how long do I have to wait to really get the costs under control? And I assume that the industry will figure that out pretty quickly, but I think that is a fair issue.
You do?
Yeah.
Quickly being?
I would bet that by another year or two from now, there is a much better rationalization of companies' spend relative to outcomes.
And finally, Sam, are we ever going to see things like this up in space?
Ever?
Just listen to this part, like this hesitation.
I hope so. In the short term, I think it's probably better to do it. You know, there's like, as you can see, this is a huge project.
Be a lot to put up there.
Huge project.
Yeah.
Putting this in orbit at current launch costs, or even at lower launch costs, feels difficult. Also, you know, we know how to cool it here. We know how to get people to service it here. We have an atmosphere protecting us from some radiation. I I hope that humanity expands to the stars someday and data centers along with it. But we're going to focus on building on Earth for now.
It doesn't sound like you think it's happening anytime soon.
It's not a short-term priority for us.
All right. So why did he say that? Well, Elon Musk. All right. So that is the underhanded thing right here. That is the what's not being said, right? Because Elon Musk is spearheading data centers in space, geo-orbital satellites, all, probably hundreds, if not thousands of satellites in space, right? That make up a data center, whatever. I still don't fully comprehend myself what a data center in space would even look like. There's ideas out there. Again, we have Project Suncatcher from Google, who's testing their TPUs in space. Again, nobody really can say what a data center in space will actually look like. Is it going to be, is there a data center on the moon? Perhaps. I know, no idea. But Sam Altman is, basically saying here that, they want to focus on the data centers here on Earth because that is where the current need is. But also the space stuff is really kind of speculative, right? So maybe that hype will die down. Again, we talked at length already about SpaceX and, in order for Elon Musk to get access to these specialty shares, right? These shares that are going to give him, more voting rights, more money, et cetera. One, he has to put 1 million people on Mars. And then 2, he has to build, I think it's like a gigawatt or something of data center compute in space, whatever that looks like. So if anyone can do it, it's going to be Elon Musk. How soon it's going to happen, nobody can really say. But we do know that SpaceX at the current moment is making money by leasing out space to Anthropic, through their data centers. And not only that, they, have been launching a lot of stuff in space. They manufacture their own specialty rockets. They're reusable rockets. So all that technology, all that proprietary tech is owned by SpaceX. So they do have a lot of stuff. All right, so let's move on from this clip. We're going to talk about our first big news. And some of you guys might be really surprised by this. I definitely was very surprised by this. Speaking about data centers. Okay, Alphabet, i.e. Google, is raising $80 billion for AI investments, including $10 billion from Berkshire Hathaway, which is a part of this news, but not the big one. Okay. So let's read on. AI is driving an expansionary moment for Google Alphabet. The company is experiencing strong demand for its AI solution services from enterprise and consumers at levels that are exceeding the company's available supply. There those words are, available supply, okay? By scaling its investments, the company seeks to expand its foundational infrastructure to support the significant growth opportunity ahead. This effort includes $30 billion in underwritten public offerings, so probably bonds, debt, et cetera, notes, and a $40 billion ATM. $40 billion ATM, the same thing that MicroStrategy uses to raise money to buy Bitcoin. Now you have the likes of Google doing it. So I thought this was a very interesting point in this whole thing, is that now you're having companies that is not Bitcoin related, going for the ATM, all right, the at the market program. So basically, how this mechanism works for a stock like Google, they can issue up to 40 billion additional dollars worth of shares. Investors go out and buy that stuff, and they use that money to basically fund their data centers or whatever, their investment into AI CapEx. So I just thought that was interesting. I really think we're probably going to see more of this come from the likes of maybe Meta, probably Microsoft. I don't know, I can't tell right now, but I do know that Google is hot on making or building out these data centers. They're competing directly with Microsoft, right? That is their biggest competitor. So I wonder if Microsoft is also going to do something very similar. So we will have to wait and see. This is neither good or bad at the moment, but this is a data point I think people should be aware of, because everyone's fear about ATM is dilution of shares, right? Now they're just diluting. They're adding more shares to the public markets, so it makes the current common shares less valuable, right? Because now you have dilution. But if everyone is buying up the stock, and we have Berkshire Hathaway, which you guys know, Warren Buffett's baby, is also investing $10 billion into this, right? So again, I just think it's rather interesting. So Alphabet plans to raise $80 billion for AI goals, Berkshire to invest $10 billion. So this news is more so on the back of Berkshire Hathaway. Alphabet is equity offerings, including an investment from Berkshire Hathaway, the Google parent, said on Monday, in its aggressive push to fund a costly expansion of its AI infrastructure. Berkshire's investment adds to the position it has built since the third quarter of last year. Last month, Berkshire said it more than tripled its stake in the Google parent, which at $16.6 billion has become one of its largest common stock investments. All right. They had this to say. This additional purchase underscores that Greg Abel believes, who's the CEO of Berkshire Hathaway, Warren Buffett stepped down, believes that Alphabet will earn a reasonable return on its AI CapEx spending, even with the firm issuing additional shares, said Bill Stone, chief investment officer at Glenview Trust Company. Alphabet said it aims to raise $30 billion through the concurrent public offering backed by investment banks, split evenly between depository shares tied to mandatory convertible preferred stock of Class A and C. In addition, the company expects to launch a $40 billion at-the-market offering program in the third quarter, giving flexibility to sell Class A and Class C stock gradually over time. All right, so as investors, retail, right, buy these new shares of Google, then Berkshire Hathaway can slowly kind of exit and use retail's exit liquidity, right? Just kind of slowly get out over time. The company is experiencing strong demand for its AI solution services from enterprises and consumers at levels that are exceeding the company's available supply, Alphabet said. All right, so that is the big news coming from Google and from Berkshire Hathaway. Okay, let me check the chat here. Let's see. So Gary Bala says, Bernie Sanders today proposed an AI sovereign fund funded by a 50% tax on AI stocks of hyperscalers to help the public get a say in AI's future and get job adjustments, help, money, etc. Of course he would. Of course he would. He's and not to make this a political thing, all right, I'm not going to even go down it. I think this is a stupid fund, just to be honest, but I won't get into the politics of it. But anyways, outside of that, let's move on. Let's see. We also have from G Nation saying, I think Nvidia partnered with Planet Labs and focuses on sending data centers to orbit. I have not seen news of that, but I will take your word for that. Maybe we can find an article or something that covers that. Desert says Charlie Munger is spinning over. He is definitely about to bust out of his freaking rest in peace, Charlie Munger. But I'm sure he's about to bust out of the ground and run up to Greg Abel and tell him to knock the nonsense off. Let's see. We also have from Altafi, Microsoft is falling behind. I hate Microsoft from what it looks like. Yeah. And they have a very sizable investment in OpenAI. So maybe when the IPO happens with OpenAI and they get, a new valuation, new valuation, maybe that'll pump Microsoft. They'll get that, OpenAI premium. But yeah, OpenAI has been under a lot of heat recently because of one, you have the Musk Altman trial finally ending. But before that, you had Anthropic, which seemed to just do leaps over ChatGPT. All right, their Claude just did leaps over it. But now you have ChatGPT 5.5, and a lot of people are saying that that is the best model so far. But you saw Mythos that has not been released yet on the horizon. That was probably the best marketing Anthropic could have ever done for themselves, right? They just scared the entire world into thinking Mythos is going to end cybersecurity companies, it's going to end software companies, and everyone was talking about Mythos. You had Secretary of Treasury Scott Bessent, meeting with bankers and saying, "Okay, what are you guys going to do to protect yourselves? How big of a threat is this thing really?" I mean, that was the best marketing Anthropic has ever done for one of its models. So, anyways, let's move on from that. So let's talk about HP. All right, Hewlett Packard finally came out with their numbers and they had a double beat. All right. EPS beat by 49%, revenue beat by 9%. Let's get into it. We saw the stock had an amazing run up today. All right. HPE skyrockets 30% on the biggest earnings beat since 2018. And you guys already know why. Everyone, again, we had Dell making a ton of money. Their revenues increasing because of the sale of servers. So HPE, Hewlett Packard, no different. All right. So HP, again, no different. All right, so overall, cloud and AI revenue came in at $7.71 billion, topping the street account estimate of $6.87 billion. Server revenue, which is a subdivision of the Cloud and Artificial Intelligence unit, came in at $5.45 billion, blowing away the $4.66 billion expected by analysts. Our CEO Antonio Neri told CNBC's Kristen that traditional server bookings are up triple digits, and it is the biggest backlog the company has ever seen. All right, there those words are again: backlog, supply constraints, bottlenecks, yada yada yada. Like, is this a bubble, right? Are we talking about a bubble here? Is this CapEx going to end? Is AI, whatever, the AI bubble going to pop? You're seeing companies like this come out and say that everybody's buying up their stuff. They don't have enough to give away, right? They don't have enough to sell. Micron, again, I always talk about Micron. Micron said that their forward production of memory is already bought and paid for. All these hyperscalers are stockpiling this stuff like their ammunition, because they're waiting for the data centers to get completed. So once the data centers get completed, then they're going to offload all this hardware into there, right? So again, really just amazing things happening, and a lot of people, a lot of investors can make out pretty well. But anyways, customers continue to invest in modernizing their infrastructure and scaling AI, and our performance shows the strength of our combined networking portfolio, Neri said. He also said that industries focused on security are seeing especially rapid acceleration for AI on-premise. So the names of like Palo Alto, Fortinet, even Cisco, Cisco switching, Cisco networks. You also have CrowdStrike, right? They're all starting to do AI on premise or AI in the cloud, AI security. All right. HPE is largely focused on providing that service to national labs and enterprises. All right. So HP is also looking to get into that game as well, having on-premise AI security devices. WatchGuard. I don't know if we have any tech heads in the chat, but WatchGuard is also kind of a security router as well, right? Or a security company. But anyway, that was HP's big stellar earnings. All right, 30% on the day. So we're not going to watch anything. We're just going to cover some of the highlights from this keynote by Jensen Huang. So he's in Taiwan currently. Tons of companies are over there. They're at the Computex event, and everyone's just kind of talking their game. I hope we get some new clips, because Jensen Huang was going to sit down with Satya Nadella, who is the Microsoft CEO, to talk about AI and probably just it'd be interesting to get their insight. So I'm hoping some more clips come out from this Computex visit. So anyways, some of the key highlights from this video. All right, so Vera Rubin platform, Jensen Huang was talking this up. He's saying that this is NVIDIA's next generation AI platform, entered into full production utilizing the NVLink 72 interconnect system, which is going to be huge for massive AI factories. All right, so he keeps talking about this, AI factory stuff, and that is what, that's what he's been talking for pretty much the entire year. Since last year, he's been talking about AI factories. He also talked about the Vera CPU. So this is coming out, built specifically to drive agentic artificial intelligence. Okay, so we talked about this before, that there's a CPU shortage, and there's only two CPU manufacturers in the United States. That is AMD and that is Intel. Okay, that's why they're getting huge, valuations, huge boosts to their share price. In data centers currently, there is a 1-to-8 ratio of CPU to GPU, right? So that's why NVIDIA's, and AMD's been doing well as far as the GPU front. But in order to have agentic AI, you need CPUs. You need CPUs for that. So now there's a CPU shortage, right? And eventually the data centers are going to move, or the hyperscalers are going to move to having, from a 1-to-8 ratio to a 1-to-4, and eventually a 1-to-1. So, this is why I see Intel, which was, almost a dead company basically until the Trump administration came in, took a stake. This is why Intel's getting also a huge boost, is because of their need for their chips, their server chips, and also just CPUs in general for everyday devices. So their foundry is a big part of their story too. So he also talked about the Vera Bluefield, which is an ultra-fast cableless and fanless storage processing system that natively integrates into data center racks. That right there is really interesting because again, you're not going to have any cables for it. It's going to be plug and play, no fans. There's going to be power efficiencies in there, and I can only imagine what kind of memory they're going to be using, or what kind of, who's going to be the supplier, because you have SanDisk, you have Seagate, you have Western Digital, out there as well. He also talked about the RTX Spark super chip, which we saw ARM get a huge boost from. Okay, ARM is a company based in the UK. They make a semiconductor company, they used to be big with Apple back in the day, but no longer. But ARM and Nvidia partnered together, and they're launching basically a laptop, right? A device, a gaming laptop. So it's an ARM-based processor, not Intel, not AMD, developed with Microsoft to bring local data center grade AI and high memory bandwidth natively to Windows laptops. And that's coming out this fall, right? So you could run a local agent on your computer. That I think is really cool, because everyone's been going out and buying, like the old Apple MacBooks, so they can install this agentic AI stuff on it and have their own agents. But in the near future, these new laptops that are coming from Nvidia are probably going to blow these away, because they're specifically built for agentic AI. He also covered a couple other different things. Cosmo 3, the Omni model, a fully open foundational model using a mixture of transformer architecture to natively simulate real-world physics, sound, and actions for robotics. This is part of their whole CUDA library stuff. Isaac Groot, he also mentioned that, which is an open development reference platform designed to accelerate humanoid robot training and development. All right, emphasis on the humanoid robot training and development, or deployment, I should say, not development. He also mentioned Alpha Mayo 2, which is an open source model engineered for next generation autonomous self-driving systems. So covered a ton of stuff in here. He covered so much. I mean, again, I think you guys, if you can spare the time, if you're driving to work, whatever, walking, spend the time and just listen to what Jensen Huang is talking about. The future is going to be absolutely bonkers, and look at my internet go down. Excuse me. So that is kind of the highlights from this Computex keynote speech by Jensen Huang. So absolutely phenomenal. All right. Moving on from that. Okay. And we saw ARM price had a 15, almost a 16% gain on this news alone. All right. Over the last 5 days, up 30%. We covered in the chat Cookiemon, or Sergio, as you guys know him, but he's Cookiemon in the Discord. He called out ARM about a month ago, right? He called out ARM, said people should get an ARM or ARMW. And I mean, it's had an amazing run, almost up 100%. So again, this shameless plug, but again, this is why I like having a Discord community, because we can all just like share ideas. Doesn't mean you have to buy every single one or even get into every single one, but it gives you ideas, right? And it's good to just have a pulse on things. Like I can't cover every single thing, and it's nice to have just other people that are focused on their own personal areas, their own personal interests, and then they just drop notes in the Discord. So again, I think having kind of a mastermind of people is just awesome, right? I don't know what else to say. Anyways, let's get off that. Okay, moving on from that, we're going to cover these last two bits. Okay, so Strategy sold 32 Bitcoin and the entire market lost their shit. Okay, I don't mean to cuss, but they absolutely did. You had the likes of Peter Schiff come out. You've had, who's a gold bug. You've had the likes of, we saw earlier Mark Cuban sold his Bitcoin. That was, way earlier. But you had all these bears come out, all these people who are spreading so much FUD saying MSTR is getting margin called. They're done for. Stretch is going in the toilet. Bitcoin's going to zero. You can't, don't believe Sailor for anything, blah, 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 blah. Like, guys, relax and chill for a second. It was just 32 Bitcoin out of freaking 840,000 Bitcoin. It's 32 Bitcoin. calm down. All right. But this is coming from Blake. All right. Blake Rogue Money. I don't follow this person, but I thought his note was rather interesting. He's saying MSTR is doing exactly what the S&P 500 or the S&P Standard & Poor's advised. S&P called for the reluctance to sell Bitcoin as a weakness. Now they're selling. And I actually did find this this note or this letter. You can Google S&P MicroStrategy credit, and this will come up. But basically, S&P was saying that they see this as a weakness that they will never sell. And we can read the line right here. The company maintains strong access to capital markets, though this could change in a severe Bitcoin stress event, which we already saw, right? We already saw that, we had a huge sell-off back in February and strategy didn't even flinch. And even if we draw down even more, it's probably not going to flinch at all, to be honest. I don't think strategy is going to flinch that much. The Bitcoin would have to be in a deep bear market for several years. But anyways, beside that, Strategy stock has a market cap of $80 billion, while it has issued almost $15 billion in combined notional value of convertible debt, which they have been buying back, and preferred equity. However, the company will likely keep relying on its ability to raise additional capital via stock, preferred equity, and convertible debt to finance additional purchases of Bitcoin, meet debt maturities, and to cover debt service costs. We view this as a weakness, particularly since the company is reluctant to sell Bitcoin as it holds as an investment. All right. So this is all about getting a better credit rating in the big picture. And this is why Strategy Saylor is saying, hey, we might sell some Bitcoin. We could sell some Bitcoin. He said it in his earnings calls that we will probably sell Bitcoin to inoculate the market. Basically, sell it, get over the FUD, get over all the nonsense that happens on YouTube and FinX or X Spaces, whatever. Just get it all out. And then, the S&P can look at this and be like, you know what? They sold some. They didn't crash. They didn't go in the toilet. They didn't go in the shitter. Maybe we can, upgrade their credit rating, right? The point is they got a credit rating, so they can go up from here. And this was a part of that. This was a piece of that that they had to do. So I just thought this was a very interesting, at least note from Blake. So, okay. So last bit of stuff we are going to talk about, and that is, and actually we'll scroll up a little bit because, hold on. There was a note from Padre. Let's see. Boom, boom, boom. Okay, am I the only one who sees the massive amount of passive investing through new ETFs being offered daily as a bad thing? And we actually have a clip from CNBC today with Tuttle Financial CEO. You guys know who Tuttle is, all right? Yield Max. If that name rings a bell, Tuttle is involved in so many different ETFs. If you actually go to their website, you will see probably the hundreds of ETFs that they are involved with. All right, so it's not just Yield Max, but they are going to offer their thoughts on this exact, sentiment. All these new ETFs are coming out almost like clockwork. Every other day, it's a brand new ETF dropping. We spoke about this across several streams where there's more ETFs than there are stocks currently. That is absolutely wild that there's more ETFs coming out. You have single stock ETFs. You have ETFs that have a varied amount of different strategies. You have leverage ETFs. You have, cover call ETFs, swap agreement ETFs, put spread credit ETF. You have all these crazy things happening with ETFs right now. So again, we are very privileged at this time. But anyways, let's listen in on what they had to say about this.
For all things exchange traded funds, I'm Seema Modi in for Dominic Chu today. A lot has been made of the recent observation that there are now roughly 1,000 more ETFs than stocks in the marketplace. It's a nice round number, but is it really anything more than that? Joining me now is Gavin Fillmore, CEO of Tuttle Financial Group, Tim Urbanovich, Chief Investment Strategist at Innovator from Goldman Sachs Asset Management. Gentlemen, great to see you both. Gavin, I'll start with you. Should it be a surprise that the ETF universe is expanding at such a rapid pace?
Not at all. I think quite the contrary. This has been happening for decades now. It's a 30-year-old industry. And quite frankly, launches are just being rewarded, right? There's more and more innovation coming to market. And as long as the asset flows continue, why would the issuers stop? And I think it's actually just the beginning or near the beginning of that.
Tim, do you agree? Is the expansion justified?
Well, Seema, I think if you look at what investors and the financial advisors that we're working with are dealing with, they're dealing with complex challenges. Things like traditional asset allocation with the 60-40 portfolio, certain portfolio hedges not working, income solutions that they need more juice from. So if you look at a lot of the ideas that are coming to market right now, they're built to help solve a lot of these solutions. We focus on the risk management side of things. You look at 2022, in a year where you had stocks down 18, 19%, bonds were also down 13. So putting different strategies into your portfolio that can provide objective risk management, these are issues that advisors need help with. And I think you're seeing a lot of the product development in the ETF industry address a lot of those challenges.
Tim just said that the ETF universe is in fact solving a problem that some investors are facing, finding the right way to get exposure. Is a lot of this being driven by some of the IPOs we're seeing, like a SpaceX?
Well, I mean, IPOs are expansion of that or extension of that. So now people are looking for more and more targeted exposures, as Tim mentioned. And recently, right, you see the advent of actually taking private shares of companies like SpaceX, having them in an ETF. So, for example, there's a space ETF we're involved in, NASA and ASA, and that has exposure to SpaceX. So leading up to the IPO, of course, there's excitement, especially from the retail market, to be able to access a product like that and gain that private exposure alongside the public.
And inflows have been increasing, and there's different ETFs that have different strategies, whether it's companies that service the space industry, those that have exposure to the private market, where there are some very highly valued names, including SpaceX. So how do you position yourself?
Well, so at Tuttle, it's a little unique, right? We're involved in over 10% of all launches. So we get to see the ETF market from almost every vantage point. I think issuers all play a different role. Tim mentioned that some are very specifically trying to create products for risk hedging, like Innovator, whereas others are, really designing product more for the retail market and for the general market at large. So everybody's creating and trying to find white space so that they can bring something new and novel to the market, which I think great for the end consumer.
Yeah, Tim,
just some notables when we talk about innovation, right? Innovation in the ETF space, just some notables that recently came out. Again, you have NGHT from X-Fund ETF led by Nicholas Wealth, or David Nicholas on X, definitely worth a follow. But you have NGHT, which is, an ETF that captures the gains of Bitcoin overnight, right? And then when the day starts, when trading starts, it actually moves all that, basically the entire position into treasuries, right? So again, just innovative, right? Then you have, the likes of, again, some of the private funds that we as regular retail investors could not get access to. Now they're allowed, right? Now they're allowed. You have ETFs that hold private vehicles through SPVs, special purpose vehicles, right? Things like SpaceX, things like Anthropic, things like, OpenAI. And then, along with that, you have very niche ETFs, something like a DRAM, where you have exposure to overseas companies, right? Things you wouldn't be able to buy if you're on like Robinhood, right? So you get exposure to the, to the top theme, which right now, again, is DRAM memory storage, especially for the AI trade. You also have futures, tons of futures ETFs. You have managed futures, you have shipping oil futures, you have gold futures, you have all these different types of future products out there. So again, we are just so lucky to be around. And then you also have, the advent of, barbell ETFs, barbell strategy, Skeptic. I'm sure you have 100 different ETFs on the list that follow, a complete barbell strategy. You have ETFs that are inspired by, the likes of, FITS that's coming from X funds or already launched from X funds. And you also have, the Ives ETF, which is Dan Ives' personal picks. So just crazy amounts of ETFs are coming out. And I think it is worth noting that people should keep an ear to the ground and follow channels that do cover, new announcements and cover things like that, because, there might be an ETF you're really interested in, or not an ETF, but a trade, a theme, or maybe a certain strategy that you're really interested in. You have auto-callables that are also a thing now, and auto-callables only used to be allowed to, very high net worth individuals, or what do they call it? Not institutional investors, accredited investors, right? Those only used to be allowed for certain types of people. Now they're available to retail. And they're doing it on single stocks nonetheless, right? So you already have some from Granite Shares that are doing, the usual suspects. I think it's Nvidia and MicroStrategy or Strategy. So just lots and lots of new ETFs coming out. So anyways, just wanted to share that. Is it concerning? I think is the question that Padre brought up. Is it concerning Me personally, I don't think it's concerning. I think it is a valid question. I just don't think it's very concerning. It's not a bubble, right? I can't see that being concerning. If anything, when it comes to like the amount of ETFs coming out, it's just giving investors optionality to things that they want that they would have never otherwise had. Can an investor still choose stocks? Yeah, but there's an investor out there, I'm sure, that wants a completely passive approach that is not just the S&P 500, right? I'm not a good stock picker, but I would love to invest in the AI trade. Well, there's 15 different ETFs out there that follow the thematic AI data center trade, right? I want to invest in space. I don't know which company to invest in. I don't, maybe not just SpaceX. Well, there's space ETFs, things like Spacey for Income, SPCI from Tuttle. There's also OrbX from Global X. There's also, NASA from Tema, which is, 1.2 billion in assets under management. So there's an ETF for everybody coming out. So I personally don't see it as a bad thing. I think what could be a negative, just to be fair, you're going to have a lot of new investors get into the game and probably follow some of the worst advice, especially on X, because you have the likes of, I don't want to mention them by name, but you have several different X accounts just pumping out ETFs, high yield ETFs, all these different income ETFs, and saying nothing but good, positive things about them. You might have the likes of that, and where a very uneducated investor might follow and then be very disappointed in. So I could see the dangers of that. And even YouTube, even on YouTube, right? There's tons of channels that cover different types of ETFs. You might have a financially illiterate new investor, start to pile in, a very young investor at that, start to pile into the likes of something like QQQI, right? Thinking, oh, it's a good distribution, blah, blah, blah. Well, maybe it's a personal belief. I don't think, young investors should be screwing around with income products. But that's just my thought on that. So yes, I there's a lot of good things, but there's, seemingly as well, bad things. But a lot of ETFs coming out to the market, I don't think is a bad thing, just net of that. All right. So just my perspective on all of that. Let's see. We have from Gary Bala saying, great to have all this investment optionality. Of course, it's up to due diligence investors to decide what is best for them. And that is true. That is the point that I am trying to make here. But yeah, hey, it's better than VU and chill, right? If you look at DRAM, I keep bringing up DRAM, but even SMH, even the semiconductor ETF SMH, you compare that with VGT, you compare that with QQQ, you compare that with SPY or VOO. An investor missed out on a ton of gains if they were just invested in VU. Now, is VU safe? Yes, of course it is. Relatively speaking, right? You don't have to pick and choose. Passive index, again, SP 500, 1929. Since then, 10% annualized returns, beating inflation, yada, 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 risk-adjusted returns, the whole 9 yards, right? But as an investor myself that, is looking for specific trades that I want exposure to, I like the fact that I can find an ETF for that. And then it's up to me as the investor to do the due diligence on what it's holding, et cetera, and yada, yada, yada. All right. So that is it for this little clip. And I think we are pretty much at the end of our stream, ladies and gentlemen. So I will open up the chat in case anyone does want to come onto the stream. Let me hit that invite guest button. Here we go. So if anyone does want to come onto the stream and, talk their book, talk about what they're investing in, or maybe you guys have questions about ETFs we can cover, you guys can put it down below in the YouTube chat, or even on X. If you guys are on X, there is a chat window. You guys can also put that there if you guys want to cover anything. All right. So I'll be here for the next couple of minutes in case anyone does want to talk. If not, then I'll go ahead and end the stream out. So let's end that, delete that. All right. So hope you guys enjoyed the stream. All right. There was a lot to cover, a ton of information to cover. And I hope this was at least a little bit educational, if not informational. I'm going to see if we have any breaking news, because a lot of breaking news likes to come out at the end of the day. So yeah, we also had Jim Cramer come out and talk, Jim Cramer said, something. Let's see. He said, he's reevaluating his pro Bitcoin stance because MicroStrategy sold 32 Bitcoin. Cramer, just get out. Get out of Bitcoin. Just get out, dude. Like, please get out. Anyways, or maybe that's a bullish indicator that he's bearish. Let's see. Let's see what else we got. Nothing. We got no news. Well, ladies and gentlemen, I think we are pretty much done for the stream. We got no questions coming in, and we got no one that wants to join in on the stream. So I think that will be it for today. I hope you guys had a good stream. I hope this was enjoyable, again, educational, and I appreciate you guys joining me for the stream. To the almost 130, 120 people on the stream, thank you for joining for this night. And I will see you guys in the next stream. You guys have a great rest of your evening, great rest of your day, wherever you are in the world. And I will see you in the next one. Take care.